Citigroup just posted one of its strongest quarters in years, and this is exactly where a diamond-style checklist helps separate a real turnaround from a headline beat. First, on profitability, Citi delivered $5.8 billion in net income, or $3.15 per share, up 45% year over year. Return on tangible common equity surged to 13.0%, while ROE came in at 11.4%. That matters because it shows Citi is no longer just improving, it is finally earning at a level that starts to look like a serious bank. Second, on revenue, total revenue hit $24.8 billion, the best quarter in a decade. Net interest income came in very strong at $17.13 billion, while equities trading jumped 45% to $2.3 billion, and investment banking fees rose 44% to $1.55 billion. So this was not just a one-line beat, it was broad-based strength across markets and banking. Third, on efficiency, Citi is clearly making progress. Expenses were held to $14.2 billion, and the efficiency ratio improved to about 57%. That tells you Jane Fraser's restructuring is starting to show real operating leverage. Fourth, on capital returns and book value, Citi returned $5.0 billion to shareholders and grew book value per share to $114.74. That is a sign the turnaround is not just about earnings, it is also about building intrinsic value. Finally, on capital strength, Citi's CET1 ratio was 12.8%. That's slightly lower than last year, but still comfortably above regulatory minimums, and it gives the bank room to keep buying back stock while still staying resilient. So my diamond-style verdict is simple. Citi is no longer just telling a turnaround story. The numbers are starting to prove it. The key question now is whether this level of profitability can be sustained across the cycle.